regarding Section 899, that's what is kind of being referred to in the media as the quote unquote revenge tax, which begins at 5% after the passage of the bill. It would go into effect on January 1st, 2026. And then every year after that, there would be an additional 5% tax. So beginning January 1st, 2026, you would face a 5% tax on a wide swath of US financial products. And then each year beyond that, up to 20%. So I guess beginning in 2030, you could be facing a 20% tax on US investments and their dividends. So that's a steep tax, as we noted last week. That's a steep tax to be paying if you're a foreign investor, especially if you're, say, an investor in Europe or somewhere in the Commonwealth. You can get comparable risk yield in the UK or Australia, New Zealand, and not be facing this tax. I was watching a Canadian YouTuber who saying that this bill also circumvents laws already in effect that for Canadian investors make it so that there's a tax refund on the taxes they do currently pay, so that for a Canadian investor today that invests in US Treasuries, they face the same tax rate as a US citizen would. And this Section 899 would roll that back or circumvent that as well. So in addition to a 5 to 20% tax, they'd also be paying a tax in Canada on these dividends. So it's pretty damaging if you look at the numbers of it. Who wants to be paying a 20+% tax 4 years down the line from today? Really, what that's going to do is just sap bond demand at a time where a lot of people are calling into question how much demand should there be for US Treasuries. I'm not saying everyone's walking away from the market. Far from it. The US Treasury market's probably one of the most liquid markets in the world, especially in the debt realm. But, these are all just compounding factors we want to keep in mind, and all else the same. Sapping bond demand is going to lead to higher rates for those risk-free products. And that's going to feed through to everything else, mortgages included. So
yeah, more upward pressure on rates than we've seen in a very long time. And it's coming from a few different angles. So obviously not good for mortgage rates either, where we're again touching 7% in a lot of cases. Certainly plenty of loans being originated well above 7%. Continue to keep an eye on all aspects of this upward pressure on rates.